Benjamin Franklin once said that in this world, nothing can be said to be certain except death and taxes. From that one simple and iconic quote alone, you can see that taxation and conversations around taxation typically have an aroma of negativity about them. And honestly, that's not very surprising because these conversations involve discussing the different types of ways in which you'll have your money taken away from you. And that's just not something that most sane people want to discuss on a day-to-day basis. And to make circumstances worse, the education system hasn't done tax any favors in terms of popularity. And the reason for this is because most people aren't exposed to some level of educational content around tax, which results in the majority of people not truly understanding tax as a whole. With that being said, while I won't blame you for not wanting to talk about tax on a daily basis, I do believe that understanding both tax and the tax system as a whole is a critical alternative to avoiding the topic altogether. And in this video, I'm going to show you why. How's it going, everyone? My name is Dan, you can call me Malone, and today we're going to do the impossible, which is to have an enjoyable and thought-provoking conversation about tax. Remember that sane individual from the start of the video who doesn't want to have conversations about tax on a regular basis? Yeah, well, that isn't me, because I'm actually the guy who enjoys talking about this stuff. And because I enjoy talking about tax, I'm really motivated to get everybody else on the same page. And the reason for this is quite simple, because tax impacts everybody in some way, shape, or form. It really just is a feature of being a citizen on planet Earth. So because tax impacts everybody, it's only logical in my mind that everyone has a good understanding of how the tax system operates. In fact, one of the most important reasons to understand both tax and the tax system, in my opinion, is because of the critical role it plays in the domestic policies of politicians around election time. And being able to understand what exactly a politician is talking about when it comes to their proposed tax policies can be the difference in determining whether they're being sincere or realistic, and can influence the way that you ultimately end up voting. So to achieve that, we're going to take a look at some of the key features underpinning the modern day tax system and the role that tax plays in our economies. But before we begin, as always, I've got asked to please drop a like in the video. I recently heard a rumor that the more likes you give out on YouTube, the less tax you pay. And if you are new around here, please do consider hitting that red subscribe button below and turning on the bell for notifications so that you don't miss video uploads. We make financial education videos on this channel aimed at making conversations like these more of a cultural norm. So without further ado, let's get started. So to begin, I want to discuss some of the features most commonly associated with an effective modern day tax system. To do this, I'm going to refer to a book that was written all the way back in 1776 called The Wealth of Nations, which was written by Scottish economist Adam Smith. In his book, Smith proposed 4 canons of taxation, which can be used to evaluate different tax regimes across the world in today's modern tax environment. The canon in particular that I want to focus on today is the canon of equity, which states that the tax or tax system should be fair. Equality, or the principle of fairness, is probably the leading contributor to arguments, disagreements, or people just generally not being too pleased over a particular tax issue. We've seen plenty of news headlines not only in Ireland but all around the world when it comes to tax scandals, usually involving companies or wealthy individuals seemingly getting away with paying little or no tax. Sometimes it does turn out that the parties who were involved in the scandal were involved in active tax evasion, which is illegal. However, most of the time it turns out that the company or individual involved in the scandal was simply just structuring their financial activities within the letter of the tax law to reduce their tax liabilities, which would be referred to as tax avoidance, which is legal. What's important to understand about tax law is that there are certain tax policies which are introduced to encourage economic activity in certain areas of the economy. But in order for these policies to achieve the common good, the right balance needs to be struck between the benefit of the policy to the taxpayer and the benefit of the policy to the greater good of society. It's not enough to justify a tax policy on the grounds of monetary benefit alone, but it's also critical that the public's perception of the tax policy is also favourable. This is where the canon of equity really comes into question. Consider Ireland's corporation tax rate of 12.5%, which is the centre of much controversy each year. From Ireland's perspective, the 12.5% corporate tax rate is critical for attracting multinational companies to the country and having them set up business here. This ultimately creates jobs, increases the demand for housing, and increases spending in the economy as a whole. However, from the perspective of the rest of Europe who have higher corporate tax rates, Ireland's low corporate tax rate is seen to be unfair, and the success of the low rate is seen to be at the detriment of the rest of the countries in Europe. On a more local level, consider tax breaks which are given to property developers who develop property in certain areas specified by tax law. On one hand, the government may see the tax breaks as an efficient way to encourage investment in underdeveloped areas. However, on the other hand, the general public might see the tax breaks as unfair, fair, because the only people who are going to benefit from the tax breaks are wealthy property developers who already have a significant ability to pay tax in the first place by virtue of being wealthy. The point that I'm trying to get across is that equality is a key consideration in every sustainable tax system. And while I totally understand the reasons to be outraged at a company or individual paying little or no tax, what I just want you to keep in mind is that there's likely a counterbalancing benefit associated with whatever tax policy that the company or individual are utilizing in order to pay little or no tax in the first place. At the end of the day, it's impossible to create a tax system which is perceived as fair and equal by an entire society. But we can all take one step in the right direction by educating ourselves about tax and the tax system so that we can call out inequitable tax policy when we see it. The remaining 3 canons of taxation proposed by Adam Smith in his book are certainty, convenience, and economy. Certainty means that the tax that an individual has to pay should be certain. Convenience means that the tax should be collected in a manner which is of greatest convenience to both the government and the taxpayer. And economy aims at minimizing the costs associated with collecting the tax. So it can be said that an effective tax policy will achieve or seek to achieve all 4 of Adam Smith's canons of taxation. So before we move on to the next section of the video, I just want to show you a quick example of how you can start considering different taxes in the context of Smith's canons. Let's take value added tax, or VAT, which is a European tax on the consumption of goods and services. In Ireland, if you were to go into a shop and purchase a bottle of water, you would pay VAT at a fixed rate of 23%. So does this tax meet the canon of equity? Well, you could make the argument that yes, the tax is fair and equal because everybody pays a fixed rate of 23% on the bottle of water, no matter who they are. But you could also make the argument that no, the tax isn't fair because a wealthy individual is going to end up paying the exact same tax as a not so wealthy individual. The reason why this can be perceived as not being fair is because the 2 individuals have different capabilities or abilities to pay tax in the first place. The wealthy individual obviously has a greater ability to meet the tax payment by virtue of having more cash. Therefore, it could be said that the wealthy person is less proportionally impacted than the not so wealthy person if the tax rate is fixed across the board. You could also say that VAT meets the canon of certainty because it's very easy to determine what VAT is owed on each purchase. VAT also meets the canons of convenience and economy because the VAT is collected by the company providing the goods and services to the consumer and paid directly to the revenue authorities. So we've discussed some of the features most commonly associated with an effective modern day tax system. But what is the role of tax in our economies? Let's first take a look at what I would see as the most obvious role of tax in our economies, which is being a source of finance for public expenditure. Every government around the world needs to be able to generate cash in order to fund the likes of healthcare, public property development, and education. Tax is often used as the main source of financing for this expenditure, and this saves the government from having to print extra money, which can lead to inflation. By looking at what's known as the tax to GDP ratio, we can see to what extent different countries from around the world are generating revenues through taxation relative to their total economic output. For example, in 2018, Ireland had a tax to GDP ratio of 22.3%, meaning that for every €100 of Irish gross domestic product, tax receipts of €22.30 were generated. Generally speaking, the higher this ratio is, the better the financial position of the country will be. And the reason for this is that the country will have more cash relative to its total economic output to spend on vital services. The United States had a slightly higher ratio of 24.3% for the same period, whereas Mexico had a lower ratio of 16.1%. So you can clearly see that different countries have different tax to GDP ratios. Aside from public financing, another key role of taxation in our economies is to redistribute both income and wealth across classes, as so to reduce inequalities. This redistribution of wealth is normally achieved by having what's known as a progressive income tax system, which effectively means that the rate of income tax which is charged on an individual gets progressively larger the more that they earn. The concept is fairly straightforward. You start off paying income tax at a certain percentage, and then as your income increases, you start to pay more and more income tax as you cross certain earnings thresholds, known as tax bands. Capital taxes such as capital gains tax and inheritance tax are also used to redistribute wealth, as it's argued that capital assets such as stocks and properties are generally associated with higher levels of wealth. And finally, tax plays a critical role in our economy as an instrument of both economic and social policy. What this really means is that the government will use tax and tax policies to promote economic activities that are deemed to be accretive not only to the economy but to society as a whole. For example, in recent years, Ireland has made significant moves towards becoming a knowledge-based economy, which is an economic system that contributes to a rapid pace of advancement in technical and scientific innovation. In order to achieve that goal, the government have introduced significant tax benefits to companies who choose to set up their knowledge-based activities here in Ireland. Examples would include pharmaceutical companies such as Pfizer and technology companies such as Intel. What the government loses in the form of tax breaks afforded to these companies, it arguably gains in the development of its people. For example, the development of skills through jobs that wouldn't have existed had the company not set up business here. So you can see how tax policy can be used by a government in order to achieve a certain outcome for both its country and its people. So hopefully that overview of the tax system was helpful to your understanding of tax from a conceptual standpoint. I'm not going to go into any detail about the individual taxes which exist within a tax system in this video, as I want this video to serve as a more of a theoretical discussion around tax. There's a ton of different taxes out there: income tax, capital gains tax, USC, PRSI, capital acquisitions tax, stamp duty, VAT, dividend withholding tax, the list goes on and on. So I'm not in any way expecting you to understand all the different types of taxes, but it's more so important that you understand the principles which underpin a modern day effective tax system and the role that tax plays in our economies. And it's also important that you're aware that what we discussed today are factors that are considered by the government on a regular basis when they are creating new tax policies. So I really do hope you enjoyed the video here today. If you did enjoy the video, as always, please do let me know in the comments down below. Leave a like on the video, subscribe to the channel, and I'll see you in the next one. Cheers.